Gbenga, welcome to Powerland West Africa. Could you just give us a run through what you consider to be the high points of activities at the market this week?
Good morning. I'm glad to be on the show. Once we're talking about the fixed income market, pretty much what we've been waiting for is the current system liquidity. We expect that over $1 trillion we're going to mature this month. So a lot of traders have been waiting for it, and hopefully some bullish sentiment follow through. Opening the week on the fixed income market, both Treasury bills and bonds. We're seeing a bit of quiet sentiment, but gradually as liquidity kept on growing in the market, so we've seen that turn around. So currently we're seeing a lot of bullish tendencies. We've seen rates on bonds drop by about 20 basis points during the week, and we expect this to continue into next week. Also on the fixed income side, we've seen pressure on the OMO bills, on the NC bills. Those ones are pretty much low, but we've seen pressure on the OMO side as well, dropped to about 4%. We expect this trend to continue. So far as liquidity remains in the market, and we don't see any CBN hiking the CRR. So far they don't do that or don't do any kind of mop-up, extraordinary mop-up situation. We expect the market to continue at this sentiment.
Gbenga, where are investors seeing the most value at this time?
Currently, the most value is on the bond side. At rates, so a bit of duration comes into play. But the most value right now is on the bond side with the longer end of the curve, trading at about 10% levels. That's where the highest value is. But also, we're still seeing a bit of interest on the medium end of the bond curve, which is about 8%, 8.5%, 9% levels. That still holds some pretty much value if you take away the duration, and you don't want to be hit too much by that curve. On the T-bill side, there's really nothing special there. Rates are low at 4% on the OMO side. On the NCB side, you are seeing rates on the 91 days at 1 point something level. So really, you can as well leave your money in the savings account and earn a bit more. So right now, it's the bond that has the play. Once liquidity comes in, we expect more interest come on bonds as they offer the highest rates in the market currently.
Gbenga, when you say that you can as well leave your money in the savings account, do you remember that the CBN has recently just crashed interest rates also on the savings account, bringing it down to about 1.25%? I was going to ask you if the fixed income market has, for that reason, seen any positives, any gain, because people are looking for where to put their monies. Savings not working anymore.
Yes, I know about that circle of 1.25, but you have to look at 90 days. Look at 90-day bills, almost below that savings rates or deposit rate threshold. So really, you just have to choose which of the loser you get to pick.
So for you, it's 1 month, 1.25 to 90 days.
Sorry? Hello?
I said for you, it's a comparison between the duration for the savings interest and that of the 90 days fixed income instrument.
Yes, exactly. Because you have to look at it on the shorter. Because on the savings, it's like if you leave your balance for a month, you get so savings or so interest at the end of the month. So you have to look at it on that duration curve. So you look at it as in relation to the 1 month Treasury bill yield curve. So like I said before, the best yield offering currently on the bond space, irrespective of the duration that brings into play and your volatility of your investment. But really, at this point, there's really no option.